What's been going on with mortgage rates? Well, they've been just sort of chilling in a holding pattern for the past couple of months, hovering between March's calmer vibes and the spikier highs that we saw earlier this year. But this week's economic fireworks had everybody wondering if rates would finally make a move, and spoiler alert, they did, but not quite in the direction traders were hoping for. As usual, the first week of the month is packed with big ticket economic data. Some of the major reports included the ISM Manufacturing Report, ISM Services Report, ADP's Employment Report, job openings, and the grand finale, Friday's Job Report, aka the one that really makes markets move. This week started strong for bond bulls. On Wednesday, a weaker than expected ADP jobs number came in. It was the softest since early 2021. Just a couple hours later, ISM Services Index chimed in with their own meh reading, further painting a picture of a cooling economy. That 1-2 punch sent bond yields tumbling and mortgage rates following suit, dropping to around 6.87%. But Friday had other plans. An indicator called non-farm payrolls, the main event in the monthly jobs report, it came in higher than expected again. Now, it wasn't a blowout number, but even a modest beat was enough to shock the market after Wednesday's gloomier setup. Bond yields spiked in response, and mortgage rates shot right back up, erasing midweek gains. By the end of the day, we were staring at rates just shy of 7%. The bottom line, we briefly dipped lower, but that window slammed shut with Friday's job report. Rates are now back to flirting with 7%, and for now, that range is holding. Looking ahead to this week now, more economic data is on deck, especially on the inflation front. But unless there's a big surprise, traders are going to likely stay cautious until there's more clarity on trade policy and federal spending decisions in the Senate. Now, one of the things that I've been talking a lot with my clients about is that volatility, those dips and those spikes. And the reality is if we are in escrow on a property, we have usually about 3 weeks to really watch the interest rate market. And if we have a dip like we did mid last week, we can lock that in, capture that, and really try to get some better numbers than a lot of these highs. If you're interested in making a move and you want to talk more about how to navigate that from a real estate perspective, reach out. I'd love to chat.